Now we start in South Africa, where Finance Minister Pravin Gordhan met with top business leaders to discuss ways of averting a credit rating downgrade to junk. Now, about 60 chief executive officers representing industries ranging from banking to the mining sector met with Gordhan. The minister, of course, is seeking to restore confidence in an economy hit by sliding commodity prices and a weak demand from China. That, of course, has pushed the rand to record lows. Now, Standard & Poor's in December put South Africa's BBB- rating on a negative outlook, indicating it may downgrade the nation's debt to below investment grade. The rand, of course, has also plunged 13% against the dollar in the past 3 months to trade. And of course, the government is committed to fiscal consolidation.
The purpose of Pravin Gordhan's meeting with the CEOs was to start to remedy some of that deficit and start to close the gap, which is large. But recognize that the ratings agency's calls is about more than just slow economic growth or a weak currency. It's about unemployment, it's about inequality, it's about institutional strength. And on that score, I think what Pravin Gordhan is demonstrating as Minister of Finance is that institutional strength in South Africa remains robust.
Now, Sumitra Naidu now joins us in Johannesburg with an update on this meeting that took place. Sumitra, welcome to the show. And of course, this was actually a closed-door meeting, which was basically about steps to boost the economy this year. Now, is there any inside information on the specifics discussed and, of course, the way forward?
Well, Uche, there's been nothing official from the Finance Minister or from the Treasury, but some of the CEOs that attended that meeting have been commenting, many of them very positive with government's commitment to reviving the economy. And of course, the fact that the minister called for a meeting with the private sector was seen as an olive branch, so to say, an assurance that government really wanted to fix this ailing economy with the private sector, and a sign of mending this relationship with big business, which has in recent years taken some strain. And of course, with the intention of using collective action to lift the economy and more urgently to avoid another ratings downgrade.
Well, Sumitra, they also discussed whether the government should allow private sector involvement in public projects. Could we see the private sector bailing out some of the troubled public companies, such as Eskom, for example, in the near future?
Yes, that's right. This apparently was discussed, although this is not new. It's been suggested before, but previously the ANC was never really keen on privatization or even part privatization. However, we are in a rather precarious position. The economy hasn't been this weak since the early 90s. There seems to have been some sort of rethink on this policy, and there are some cases where government has allowed part privatization, like the public-private partnership model at Telkom. That was largely successful. There was also talk of transferring skills from the private sector into state-owned entities. Some of these big SOEs like SAE and Eskom have weighed heavily on the fiscus. So just over a month ago, we saw the telecommunications minister appointing Mark Barnes as CEO of the post office. That's another troubled state-owned entity. And Barnes, of course, has 25 years of experience in the financial services industry. So this is what they're looking at to turn these loss-making entities into proper commercially run businesses. Uche?
Now, Sumitra, the World Bank just cut its forecast for South Africa's economy from 1.3% growth to 0.8%. Now, at this stage, do analysts believe that South Africa will be able to avert a credit ratings downgrade? And of course, where does sentiment stand right now in the country?
Well, sadly, most analysts believe it's too late. The ratings agencies have been warning for some time now, and those warnings have been about South Africa's debt position, the current account deficit, growing unemployment, the lack of implementation when it comes to the National Development Plan. None of these are short-term fixes. The World Bank also echoed what we knew for a long time. The National Development Plan will only work with growth of between 5 and 7%. Now, that's the way it's designed. This economy, though, is so far from that right now. On the upside, there are some analysts that are optimistic. They believe this latest meeting between the finance minister and the private sector is a move in the right direction. And the fact that the government is lending an ear to privatization and public-private partnerships is being seen as a positive.
Well, thank you, Sumitra, so much for those insights. Of course, she's joining us from Johannesburg. Now,